if there is one bank which has redefined the dynamics of the banking sector in the last 3 years, is State Bank of India. Not only they managed to really stay ahead of the curve, they've redefined the risk-taking capability in a very tough environment. And I've always maintained that the chairman or the current chairman of State Bank of India, Mr. Dinesh Khara, in essence has really been instrumental in driving and motivating the team. The phrase which I used for State Bank of India a couple of years ago was, who says elephants cannot dance? When one looks at State Bank of India's profitability and the comeback in terms of NIMs and adaptability with customers, I think elephants can dance. Mr. Khara, fantastic to have you back on ET Now. Thank you for joining us. This is our first interaction after your quarterly numbers. When we met last time, we were discussing your March numbers, January, February and March. Today it's June and 2 months have already gone through. How is the quarter evolving for you so far, sir?
I would say that the current quarter looks to be almost on track. We are witnessing a reasonable growth in the deposit and as well as in the loan book also. So I think hopefully we should be in a position to maintain the tempo. And while I say so, I'm very mindful of the fact that the real economy actually defines how the banking system will perform. And to that extent, the kind of initiatives which have been taken in the real economy, they are actually now panning out. We all know that when it comes to any investment decision, there is always a lag between the time it's debated on the drawing board and by the time it gets implemented. So I think what I sense is that now people are moving towards implementing the decisions which were taking on the drawing board. Fresh investment we should get to see in the current financial year. There is a lot of positive sentiments. So eventually all this opens up opportunities for banks like us, and we are quite hopeful to capture all those opportunities.
Mr. Khara, 2023 was a tough year for the economy, but it was a great year for State Bank of India. Record profits, record margins, record surge in stock price. 2024 is expected to be a good year for the economy. So in a tough year, if it was a great year for State Bank of India, in a good year, will it be a super duper great year for SBI?
Our effort would be that we should maintain our prudence, which we have demonstrated in the past. And with that, we will continue to grow. And our effort would be that we should reward the confidence of our stakeholders in a manner which is befitting for their confidence.
Then why are you being conservative about your credit growth?
Well, we have got a higher base. Today, as far as our balance sheet is concerned, we are a 32 trillion bank as far as the loan book is concerned. So last year, of course, we have grown at towards 16% plus. So hopefully, on a higher base, my expectation is that we should be growing at around 14% or so.
So 14% is the minimum. Anything above that could be a surprise.
My effort would be to grow in the range of 12 to 14%. But yes, of course.
But you've given a lot of surprises last 1 year. So I'm assuming that you like to give us surprises this year also.
No, I believe in under promise and over delivery. So okay. That is what I believe in.
Sir, my next question perhaps in a sense would be an indication coming from India's biggest banker that what is your understanding of the credit cycle? Could it be a 3 to year 5 credit cycle, or this current credit cycle could just go beyond 5%?
See, as I mentioned, that the credit cycle is a function of the real economy, and the kind of positives which we are looking in the real economy in terms of the initiatives taken in the direction of PLI, and also initiative taken in the infrastructure, which eventually gives a boost to the core sector of the economy. And the other one, which is most important, is the focus on the renewable sector. Renewable sector, EVs, batteries, hydrogen. So these are the new initiatives which are not there in the past. So I think, and also there's a due focus on bringing in the global manufacturers, and India becoming a part of the global manufacturing network. So I think this is, the way I look at it is that this is going to open up multiple opportunities in the economy, and these new levers of growth will go a long way in terms of supporting the economy, and perhaps the general perception of the credit cycle that it is 3-year cycle or 5-year cycle, that perception might get defied. That's what my understanding.
So you feel that we are in for a multi-year and a multi-quarter credit cycle?
I would say that the kind of things which I just described, that actually gives me some kind of belief that we are into a multi-year growth cycle. And we have seen when it comes to economies like China, economies like Taiwan, they have witnessed a multi-year growth. So irrespective of the credit cycle, they have seen that. And that is essentially because they could add some new levers of growth in their economy. So it's almost a similar trend which you are witnessing. So I'm quite hopeful that this is going to be a multi-year growth cycle.
A solid endorsement coming through. I was looking for that answer, Mr. Khara. Mr. Khara, at the beginning of a credit cycle, banks, and especially big banks, they always benefit. Deposits are lower and lending is at a much higher rate. Now that interest rate regime is becoming benign, can one assume that your NIMs will also peak out?
Well, when the interest rate regime becomes benign, of course, the deposit interest rates may not go up much, but at the same time, even the loan book also may not witness the kind of increase in the loan rates. So having said that, if at all, I think the way things looks like in the current situation, it appears to be a long pause. So if at all it's a long pause, then perhaps the interest rate regime will remain more or less stable. So hopefully we should, as a commercial lender, the way I look at it is that it will probably give me an opportunity to maintain the NIMs and to improve it wherever there is elbow room available for increasing the MCLR, etc. But the fact remains that we have to be very, very mindful in terms of the quality of assets, and that is something which also means that the good quality assets are looking at the best of the price too. So I think perhaps a bank like us will have that kind of ability, and it will certainly help us in ensuring that we improve upon the NIMs which we already have as on 31st of March, and that will be our serious and honest endeavor too.
Mr. Khara, I distinctly remember when you took over as the Chairman of State Bank of India, you said, look, the challenge for me would be to bring our ROAs above 1% because of the legacy issues you have. And now the ROA is definitely above 1.5%. Do you think FY24 could be the first full year of 1% ROA for SBI?
I'm quite hopeful, because if at all we look at the previous 3 quarters, but for the first quarter of the previous year, when we had booked the MTM losses, all other quarters we have booked ROA of more than 1. So I'm quite hopeful that the financial year 24, we should have a ROA of certainly more than 1.
So how do you see the cost to income ratio moving? Because what you've done, Mr. Khara, is that you've kept your cost under control. They've been very tight. I mean, you've really been, sucking out a lot of efficiency from the system.
That continues to be the focus. So hopefully it will help us in bringing down the cost to income ratio to below 50, which is our goal. This year, of course, we had some one-offs, which we had in terms of almost about 3,100 crore we have provided, and that is out of that about 2,500 crore was on account of the wage revision, which has got due as from November 2022. So we have already provided for that. So, and apart from that, we have also provided for the PLI which we paid on the increase in the operating profit of more than 10%. So that we had provided for. So I think, to my mind, we have taken some initiatives. As you are aware that YONO is something which we introduced, and last year we succeeded in underwriting more than 1 trillion of the asset book only with the help of YONO. So that this kind of initiative actually reduces the cost quite a lot. And today we have got almost, in fact, more than 60 million users who are there on YONO, and more than 10 million users are actually logging in on a daily basis. So we are quite hopeful that some of the initiatives which we took last year we could actually derive the benefit of that only for the half of the year. But this year, the full year will be available, and we'll be in a position to ramp up our asset book, which we're underwriting through. So that also will help us in reducing the cost and improving the incomes. Apart from that, we had come out with the operational support subsidiary, which is actually helping us out on ground to connect with the low-ticket farmers and also low-ticket business opportunities. So that also we started in the later half of the previous year. It has done well till now, and we hope that it will pan out even further in the coming year. So even that will also help us in reducing our cost and improving the various complexion.
Do you think the real bugbear for the banking sector per se, especially PSU banking sector per se, could be the new norms? Whenever they are implemented, they could force you to take a lot of charge, a lot of write down?
I don't think so, because ECL norms, which even Honorable Governor RBI has also indicated yesterday, that banks will be given sufficient time. This is also a derived function of the loss-giving default and the PD. So when we look at our book, we have got a situation where our loss-giving default has come down quite a lot. It is evident from the credit cost, it is evident from the PCR, which we already have. And also the PDs, also we expect that the better underwriting practices which we have put in place will ensure that our probability of default should be much lower going forward. So though at a point of time when all this discussion paper was brought in, we had done an assessment, and that showed up that about 24,000 to 25,000 crore was the requirement for the ECL. But the discussion paper also mentioned that they will be giving 5 years time to the banks for absorbing this kind of a number. That's one dimension. The other dimension is that today in our book we have got provisions for other than the NPA provisions are as high as about 35,500 crore plus. So which means that 25,000 crore of the ECL is almost, it will not have any impact whatsoever on the performance of our bank or our quarterly results even. Because if at all we go by what the RBI has mentioned in terms of 5 years time, then on a quarterly basis it will come out to be about 1,250 crore. So normally last quarter we have booked a profit of 16,000 crore plus. So it is not really a significant number. We can absorb it without any impact on the balance sheet.
Mr. Khara, we've seen what could be called as a fight for liabilities in last 12 to 18 months, and you maintain that, look, for State Bank of India, given our size, our brand, our SLR norms, we don't have a problem. Is that war now over?
I think war perhaps might continue, because some of the banks are still having the credit deposit ratio as high as about 85% plus. So I think that will probably push them to clamor for liabilities. So war might continue, but how long, we'll have to probably wait and watch, because how much more they can shell out to be seen when they would not have any possibility of increasing their MCLR, etc. Because as I indicated, that we seems to be in a long pause situation. So I think how much of elbow room they are left out with as far as the increase of the MCLR is concerned. So I think some of the banks who have got a very high credit deposit ratio, they might remain in the fray. But how much more, I think we'll have to wait and watch.
So let's understand your book composition, Mr. Khara. Corporate, retail, agri, MSME and SME. In all the book structures which I mentioned, is there any stress point in any of the categories?
Not really. I would rather say that last year we have seen that we have brought in improvement in the GNPA ratio in all the books. So I think which actually confirms that the actions which we have taken have started yielding results. So we will continue the same actions, and that will probably help us in improving the complexion of the book. There are certain legacy issues with various books, but I think to a greater extent we have addressed, because our SME used to be more than 5%, now it is actually less than 5%. Agri used to be somewhere in the 2-digit. We have already brought it to the lower 2-digit, and we are very hopeful that it will come to the single digit as far as the GNPA is concerned. And overall GNPA is much lower. So I think all said and done, I expect that we should not have any challenge as far as the quality of book is concerned.
But realistically, sir, banking sector always follows a cycle. How far are we away from the first flash of NPA?
No, we very closely monitor, and I would be happy to share with you that as far as our corporate book is concerned, our provision coverage ratio is as high as about 98%.
Okay.
So I think that's not really much of a challenge. And there would be some NPAs would certainly be there in our system, but I think the more important aspect is that the better underwriting, better follow, better control helps us in containing those NPAs and maybe ensuring that we make effective recoveries. So that is something which, and that's why there's adequate focus on this particular aspect on our day-to-day banking too.
The fact that State Bank of India has just announced that they would be looking at raising 50,000 crore via the debt market, now that's a big number. You are not going the equity market yet, and you've not gone the equity market route in last couple of years. But 50,000 crore coming from State Bank of India and fundraise is a serious endorsement. And then you're telling me you'll grow at, sir, 12 to 14%, which means that you'll beat the number.
Sorry?
You'll beat the number if you're raising capital that aggressively.
No, see, the point is that we are raising capital. This is going to be a 81 itself is somewhere around about 20,000 crore approval we have taken. And we will also be raising some infrastructure bond because we have got a decent book of infrastructure bond. So when we look at the pricing of the infrastructure bond and our book which is there to cover it up, it makes a lot of economic sense for us to go for the infrastructure bond, and then we'll be raising some tier 2 also. So essentially we are doing all this because we feel that we have obtained the approval, and we'll be in fact we will be very mindful about the prevailing interest rates, and accordingly we'll be knocking at the door of the market for raising the money. But yes, of course, we have a plan which will be done during the course of the year.
So no equity raising plan in FY24?
See, the way we look at it is that since we have got an ability to raise 81, and also when we look at the tax efficiency of our 81, from the point of view of the cost cost of capital, 81 makes a lot of economic sense. So that is the reason why we want to really ride on the strength of the balance sheet, raise 81 and create more and more value for our stakeholders.
Fair point. Some of your peers are also raising a red flag that PSU banks are not really pricing in the loan correctly. They're taking far greater risk than what actually they should be taking. Is there a valid criticism?
It may be relevant for some of the other public sector banks, but certainly not for us, because why? We are very, very mindful in terms of the RAROC, and each credit proposal which we evaluate, we have a threshold level of the RAROC, and we ensure that it must meet that RAROC. So I think we are very mindful in terms of and that RAROC actually captures the risk and the pricing of the risk properly, and that is something which is evaluated by all the decision makers before committing any lines.
Couple of last questions, Mr. Khara. Every time we speak to you about, you said, look, it's growing, and we're happy the way it is growing, but we wanted to grow more before we list it. What is that more? Because now itself it's a force to reckon with. It's become a platform, the size, the scale. It itself has become a independent bank of its own now. What is that right time for to list?
I think to list or not to list is a secondary question. The first and foremost is that how to leverage the potential which is available in YONO for the benefit of our current stakeholders who have reposed their confidence in the bank. So our effort will be that. Our effort will be to reduce our cost. As I mentioned, that YONO is one of the levers which we are using to reduce our costs below 50%. So hopefully we have already got about 60 million odd registered users, and more than 10 million users are logging in on a daily basis. So we are now, in fact, as far as the user experience is concerned, we are trying to improve that experience. It has already been done. Now we are embarking upon our next project, which is 2.0, and this project is nothing but creating a digital bank within the bank. So I think once we succeed in doing that, and we actually want to ramp up our number of users, from registered users, from 60 million to at least 300 million.
So if I read in between lines, you will only list after that number is achieved.
I will list or not list will probably will deliberate at the material point of time.
Okay. In FY24, at some point in time, would the SBI board be consider exiting Yes Bank? It was an investment. It will be treated like an investment.
Too early to say. We have not really broached the subject in the board. So once we broach the subject in the board, I'll have their mind.
And one more subsidiary, sir, which is very close to your heart, SBI Mutual Funds. You said that it's doing well, number one in terms of size, scale, number of investors stroke unit holders. You said I will list at the right time. But AMC stocks have just gone down 40 to 50% from the high. So I'm assuming that that listing plan is also on the back burner.
As of now, yes. As of now. Because actually, such kind of entity are not in need of the capital. These are knowledge-heavy industry and they are capital-light industries. So I think our effort is to continue to invest into knowledge building of the company and not as much expose them to the market risk of raising equity.
So one request, if you could clear the air, is that there is a perception that State Bank of India is an old bank with old policies and a great brand. And millennials, they don't like to open accounts with State Bank of India. They want something snazzy and jazzy. Is it true?
I don't think so, because when I analyze my data relating to and also otherwise also the accounts which we are opening, this is more of a perception, but not validated by numbers. Because at times we have engaged with millennials also, and the kind of experience which they get onto our various apps, into the fairness of our product, into the terms and conditions of our loans, they find it to be a very, very honest and a bank which sticks to its words. So I think that is something which is appreciated by millennials too, and that is something which is borne out in the numbers which we have.
What is that big number for FY24 SBI is chasing, and what is that aspirational number Dinesh Khara has told his team that we need to achieve?
I'm actually very clearly focusing on the efficiency parameters, which you rightly mentioned in terms of ROA, ROE, and maybe even bigger number for the profit.
And that number would be, sir?
I think we'll have to probably look at the trend for a quarter or more. Then perhaps we'll have some kind of a better visibility.
But you're starting the year on a high note. Do you think it's going to be, looking at what happens tomorrow, we don't know, but looking at the circumstances, how things are evolving, inflation, interest rate, RBI commentary, you think we're in for a good year?
Yeah, this as of now it looks a pretty good year for the banking system.
Final question, sir. What's that one word which defines Dinesh Khara? Grit, persistence, patience?
Persistence.
Persistence. And you've been persistent in turning things around, persistent in cutting the cost, bringing ROA high, and ETNO has been persistent in bringing this message out that who says elephants cannot dance. State Bank of India is an example where hard work, diligence, grit and persistence and great leadership can really create the magic. Really appreciate your time, sir.
And would like to see elephant doing salsa.
We look forward to that. So elephant doing salsa, and I'm sure it'll happen one day.
Thank you very much.
Thank you, sir.